$40,000. That's what was sitting in Marcus's bank account. The day he decided to buy a $68 million company, no inheritance, no trust fund, no rich uncle writing checks, just a regular guy in Houston, Texas, who understood something that most Americans will never be taught. Not in school, not in college, not at any job they'll ever work. He didn't borrow the money, he didn't win the lottery, he didn't go viral on social media, he just knew how a deal actually works. And here on Money Decoder 3004, we're going to break it all down for you. So by the end of this video, so will you. Here's the lie most Americans are living right now. They're told the only way to build wealth is to get a good job, save money, maybe throw some into a 401k, and hope for the best 30 years from now. But the people actually getting wealthy, they're not waiting 30 years. They're buying businesses that already make money, businesses with employees already on payroll, contracts already signed, customers already spending. And here's the part that'll blow your mind. They're doing it without having the full purchase price in their bank account. This strategy has a name. It's called Entrepreneurship Through Acquisition. Wall Street has used this playbook for decades. Private equity firms have made billions off it. But regular Americans, they're never told it's even an option. Until today. The company was called Greenfield Logistics and Warehousing, based right in Houston, Texas. 14 trucks running up and down the highway, 2 bonded warehouses packed with inventory, 112 employees showing up every single day, and contracts with 3 Fortune 500 companies. The kind of clients that pay every month like clockwork. The owner, let's call him Robert, had built this thing from the ground up. 22 years of his life poured into it. But Robert was 64 years old, his knees were shot, his wife wanted to travel, and he had zero interest in training someone to take over. He wanted out, but not just for the money. He wanted his people taken care of. He wanted a clean exit on his own terms. That right there, that motivation is exactly what Marcus was looking for, because a motivated seller doesn't just sell you a business, they help you buy it. So how do you actually close a $68 million deal with $40,000 in your account? You build what deal makers call the stack. Think of it like a puzzle. You don't need one giant piece. You need several smaller pieces that fit perfectly together. Here's how Marcus built his Layer 1, the SBA 7A Loan. Most Americans have never even heard of this. The Small Business Administration offers government-backed loans, specifically designed for buying businesses. Marcus secured $38 million through this program, not based on his personal bank account, based on the business's existing cash flow. Layer 2, the seller note. Marcus went back to Robert and said something most buyers never say. He said, I can't give you the full price up front, but what if you became the bank for part of it? I'll pay you back with interest over 5 years. Robert said yes. Why? Because he trusted Marcus, because the deal was structured fairly, and because a seller note meant Robert would earn more money over time, not less. That added another $15 million to the stack. Layer 3, private equity. Now here's where most people get it wrong. They walk into an investor meeting with a pitch deck and a dream. Marcus didn't do that. He walked in with a term sheet, a structured deal already in motion, numbers already on paper. That's the difference between someone asking for money and someone offering an opportunity. 2 private investors came in for the remaining gap. And just like that, the stack was complete. But here's the move that made every single piece of this possible. Before Marcus talked to a single bank, before he approached a single investor, before he even made Robert a formal offer, he went to one of Greenfield's Fortune 500 clients and secured a signed contract renewal. One signed piece of paper from a billion-dollar corporation saying we're staying. That changed everything. Banks don't lend based on your dreams. They lend based on predictable cash flow. That contract told every lender in the room, this business isn't going anywhere. The revenue is locked in. The risk is low. Suddenly, doors that were closed opened. That one move is the thing most first-time buyers never think to do. And it's the exact reason Marcus closed when others couldn't. On closing day, Marcus transferred his $40,000 as good faith capital. The SBA loan funded, the seller note was signed, the investors were in, and just like that, Marcus owned 76% of a $68 million company. 112 people kept their jobs. Robert got his clean exit and flew to Italy with his wife 3 weeks later. And Marcus, he went from an employee with 40 grand in his account to the owner of a company generating millions in revenue every single year. Not because he was lucky, not because he was born into money, but because he understood one thing. The deal structure is the money. Here's what I want you to take away from this. There are thousands of businesses for sale in America right now. Restaurants, trucking companies, laundromats, medical practices, manufacturing plants. most of them owned by baby boomers who are retiring with nobody to sell to. They need a buyer. And that buyer doesn't need to be rich, they just need to be structured. If this video changed how you think about wealth, share it with someone who needs to hear it. And if you want more money, secrets decoded every single week, you're already in the right place. This is Money Decoder 3004. Hit subscribe, and I'll see you in the next one.